they find it difficult. They find it difficult to know what they are seeking out for on the charts. Some of us have a lot of strategies that we have put in our mind over the time. While some people are there, they don't even know what they are really looking at. Once there is a break of structure, they want to just look at every other block. I know it happens, right? Sometimes you cannot just wait for the criteria to build up because sometimes the criteria don't just build up and the market just moves. And sometimes the market criteria will build up and then the market will even still hit your SL. It's very crazy. And that's why the last time we had the classes, I talked about supply and demand flip, because those are also criteria you can look at to pick the trade. Yesterday we had a very good, we could have had a very good sell on gold, but we all went to go and start buying gold at the wrong time, and we got burned out yesterday. I think it was around here. We got burned somewhere. We just got burned out. I think it was here. We got burned out. I think it was around here yesterday. We got burned out. It was around here. We all got burned out, right? And actually didn't get to our POI for the sale, and that was very painful. I will not lie to you guys because I was ready to load it up from there, but this old one, I didn't take partials. I just let it move on. I wanted it to buy up into this area at 1852, 1853 area, and then I sell. But then it didn't buy into that area because I was so certain of the area based off of the fact that it broke the structure. It broke the structure yesterday to the low side. It broke the structure to the low side. It broke the structure to the low side. So I was expecting it to come back into the other block there. But unfortunately for us yesterday, the market went back into, I think it was a breaker block. It didn't even get to the breaker block. This is the breaker block. This was where the entry was on the 5 minutes breaker block. I think this was where our entry was on the 5 minutes breaker block here. But I told you guys that this breaker block didn't really serve as a breaker block because it didn't take out these highs. But I put the entry somewhere around here, if I can recollect very well, somewhere around here. And it was painful that at all these places we did not take profit to do what we wanted to do. It was really painful. I will not lie yesterday. If you realize after that trade, I did not talk again on the group because I wasn't expecting to take that type of it was like a silly loss to me because I knew the market was going to sell and I went into a buy and, and I got burned out. So it really got me pained. Like I should have just waited for my sell. And if the sell did not happen, then I would have just been no trade at all, right? I've been no trade at all. And I think from that $130 account, I think I over leveraged a bit and I lost that account back to like 90. I lost the $30. So it really got me pained from this buy alone, got me really, really pained yesterday. So I just shut out. I didn't trade anymore yesterday. There was no need to do that. There was no need to trade. So yeah. So that's by the way. And that was little. What was paining me more was the fact that I did not hold on for my setup. Okay, so that's by the way. What I really want to show you guys, give me a second. I started thinking to myself that we're trading this pattern, this Asian high, Asian low patterns, and I wasn't really feeling it really because personally, I don't like trading that early. I don't like sitting on my chart that early, to be very sincere with you guys. So I decided to test it out on New York Open. What if we test this thing out on New York Open? What will happen? Let us see how New York even reacts. Why I was not feeling the Asian one is because there is no much volatility. There is volatility on London Open, but there is more volatility on New York Open. I know that almost everybody here agrees with me. There is more volatility on New York Open than on London Open. So that was why I was just thinking all night, like, well, something has to be, right? Something has to be done. Something has to be done. We need to get a back move on this. So I tested it on 7 days. And I want you guys, after I show you, I tested it on EURUSD though, and I'll be trading it more on EURUSD because of where I backtested it. I will also backtest it on gold and GBUSD for the fun of it. And for the fun of it. For the fun of it, I'll backtest it on gold as well and GBUSD, but I backtested it on EU and it did very well. So let us just run through it together. Okay, so let me run to EURUSD. Now this is Oanda. Hopefully we have the same outcome, because all these things differ most times. You'll just be shocked how they are different from one another. So I'm taking us back to like December 12th, December 11th. That's on December 11th is Sunday, so we'll just go to Monday, December 12th, and wait for London Open. So London Open, the time I use for London Open is our 8 a.m. Nigerian time, okay? And I have set my time to +1 Lagos time, okay? West African time. So yes, we are +1 London time, okay? You know how to set your time now. Let us look for it together. Where do they normally set time? Let's confirm again. This is the time zones. Other symbol time zone, UTC +1 Lagos. So let us move to Monday, 8 o'clock, 8 a.m. and Monday, 8 a.m. Fast forward it to 8 a.m. So let me take it back to, I need to be very precise on 8 a.m. Okay. Okay, so this is the 15 minutes time frame. And mind you, every other strategy that I taught in my course is still very valid. Very, 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 very valid. But then we need to watch the dynamics of the market and find an edge, so that if one does not pull through, we can try the other strategy out that can pull through, but it's still within the framework of the smart money concept. Okay, that is what we are doing. We are still around the framework of the smart money concept, but we are trying to build different edges around it so that we don't get stranded. Because sometimes you could, like this very one I want to show you guys now, it doesn't work every time. Sometimes you might go 2 weeks, 3 weeks, and it will not be profitable, to just be hitting stop loss. And then you have to know that at this point, I have to go back to what I know before. Or once you know, you start noticing the changes in the market dynamics. Okay, and that's part of the perks of being a member of the Olo of Trade. Why am I stammering? Be part of the Olo of Trade mentorship. We get to study the market together and see how the market is changing dynamics. Besides, this is a new year. You will be shocked. The market might change dynamics totally this year. You will just be shocked. It's not the same way the market was in 2020. The market was most of last year. You know, the market changed dynamics. The smart money concept was fast and snappy in 2021. As you just break structure, it will just go and pick Monday to Friday. It was really, really awesome. Okay, and then it started misbehaving mid last year. So let us look for the highs or the lows that forms after 8 a.m. So this bearish candle formed around 8 a.m. So from here now, we are going to run it to 2:30 our Nigerian time. That is 14:30. If you can look at the time down there, 14:30. That is when the New York session opens. That's when New York session will be in 8:30 a.m. Okay. So we are going to run it through. And then that's where we'll pick our highs and our lows. So where are we? Where are we? We are at, shit, visitors are loud, man. Even stay there. Okay, so where was 8 a.m.? This was 8 a.m. This bearish candle here. So this was the lowest point. So we are going to mark that lowest point now. Lowest points, right? And then this was the highest points in all. It was the highest point right there. That was the highest point. So what I'm going to wait for now is a break of either of those points. And then this time we are not going to be catching long moves. We're going to be catching short moves, but they are precise moves. So let us see where it breaks first, whether the highs or the lows. Okay, so the eyes were taken out. So once you see your eyes taken out, you go on to your 1 minute time frame straight up. As you can see, there was a double top here. There was a double top here, triple top rather. 1, 2, 3, 4, according to the 1 hour time frame, 1 minute time frame. And this takeout took out the liquidity here. It is very, very obvious for you to know that after a liquidity takeout like this, if we see a break of structure, you should look for entry and sell after this type of liquidity takeout, right? So this one looks like a normal play out for us without trying to overthink it. Okay, so at this point, we are going to look for a break of structure, a break of market structure, or a shift in market dynamics in market structure before we take the trade. So let us see what plays out after this. First of all, let's mark our lows. This is the low we are trying to take out, right? This is the low we are trying to take out right here. This is the low we are trying to take out right here. So let us see how we take out that low. So we've taken out the lows right now, right? At this point now, we are looking for buys. We are looking for sales now. Taking out that lows, we are looking for sales. Now, I have noticed that we should stop trying to wait for markets to hit our order blocks, because smart money concept is now really being manipulated. So we try to take trades off imbalances. So that means we'll be widening our stop losses, right? We'll be widening our stop losses and we'll be reducing our lot size. But we can risk the same thing on our account. So what I find here on the 1 minute time frame is an imbalance that has been formed here. Okay, an imbalance that has been formed right here. We are all watching it together now, Shay. An imbalance has been formed right there. So that's where I'll take my trade off from, the top beginning of the imbalance, and then my stop loss should be around the top there. Should be around the top there. Okay. Should be around the top there. But to be very safe, put your stop loss above the highs. To be very, very safe, put your stop loss above the highs. But if the highs now get too much, put your stop loss above the previous structure. But I would love us to work with these very highs. Then we target these lows right here. Because while we're targeting our lows, this is where we'll take our first partials right here. Because once we break this structure, then it is a short sell. And then we have to take another partial here. So you can have different TP levels, and then here finally. So now we have ratio 1 to how to take partials. You open if you are using 0.5 lot size, when it gets to that TP level, you close from the trade. That is how to take partials. You close from the trade, or you can open 3 different positions so that you close one position, second position, as it occurs. You understand? That is how to take partials. You close positions as you hit those points. So as soon as it hits this point, you close. Maybe you open 3 positions because of 3 TPs. You close one of the positions. When it gets to this place, you close second position. When it gets to the close third position, or everything just closes, right? So now we wait for price to come and take us in, and then we sell. So yeah, we have a ratio 1 to 2.2, 7.5 to 7 with say 17 TP. This is a brilliant move, because if you are using one lot size on a $1,000 account, you are risking 7.5 of that account and you're making $170. Quite good for me, and it's very okay to end your day. So let us see what the market does. Okay, so yeah, the market takes us in right here. So let's see if we run straight into profit or we hit a stop loss. Okay, almost at our stop loss, but it didn't hit our stop loss. This is our entry, so we are still in the trade. TP1, TP2, and TP3. So that's it for Monday, December 12. Right, for Monday, December 12, straight to TP, beautiful trade. Now this is what I wanted. This is what I now noticed around all these things, that now if you were trading off other blocks, yeah, if you were trading off other blocks, you would have been stopped out by this move. You would have been stopped out by this move, and it would have been very, very annoying. You would have been stopped out by that move, and it would have been very pissing. Okay, now this move created a breaker block. Let us explain this thing with technical sense now. This is the algorithms that we need to understand. This move that took you out here created a breaker block here. This breaker block is valid because this is a structure. Move down, base, rally, base, rally, right? And then it rallied to the top and it took out these highs here. but it did not take out the main highs though, but it took out, because this highs was the one that took out this liquidity right here. So once it takes out this high, we should start looking for buys. There's no need. It's already fucked up. We fumbled the whole bag here, right? Has messed it up already. So, and this is an ABC pattern. I don't know. I can't explain the ABC pattern yet though, but it's very annoying pattern like that. This is A here, this is B here, and this is C up here. And the C took out the highs of A already. So yeah, we should be selling down to B. So if this one here comes and takes out C points, no problem. The trade is invalid. So it took out these highs. Let me widen up the chart again. So it took out these highs and then made this other block, this OB, this breaker block here, quite valid, right? Made it quite valid. So here we go. So this would have been the ideal spot to take an entry. Do you see the difference now? Do you see the manipulation now? Now you would have, let us assume I took a trade here, because personally, if I did not know what I was doing at this point with strategy, I would have actually taken my trade off this other block. And then I would have put my entry here, put my stop loss. Some people are good with smart money concepts, so they would have put their stop loss above this point, right? Good. Some people like to give the market space to breathe. I do it sometimes, especially if the main structure is not so far from the breaker block. I'll put it above the structure. And this is less than 10 pips. So most likely you would have put it above the structure. But sometimes you want to flex your risk to reward. And then you want to put your stop loss just above the other block there. You're trying to flex on everybody that I use 2 pips stop loss, blah, blah, blah. And then you would have been targeting these lows, maybe you are targeting more than that low. So let me check the 15 minutes time. Say, you would have just been doing your own. You would have been targeting most likely this place here, around this area here, because there's a fair value gap around here. So you're targeting somewhere around there, about 30 pips, right? No problem with that. But now you have been stopped out. You have been stopped out. And you know how annoying that would be. Sometimes after being stopped out, you just want to close your chart and go and sleep. Like, what the fuck have I been doing here? Something I've been monitoring since and all that and all that. But then the market did something we call forgetting the name again. It moved the money, okay? It moved the money from this block now to this place as soon as it broke this top and created the breaker block there. So the money stayed in the breaker block. So as soon as the market came down, moved up and did not take out these highs again, and it took out this breaker block, which could have served as an order block because it has taken out this high, and it took out this place, it came back, came into the other block. That could have been the perfect entry. If you had been monitoring all this move, this could have been a perfect entry to even use a tighter stop loss, maybe above this week here, and then target the lows you want to target. But unfortunately, none of us saw that one. So that is just a dream that never came true. Okay, that's just a dream that never came through. So our main entry, our main trade was here that ran to profit around 17 pips here. So that is it for that day. So let us move to another day. Let us fast forward it to the next day and see what we have. See what we have. Fast forward it to, that was Monday 12th. So let's go to Tuesday 13th. So if you wonder if this thing was, now the thing took our TP and went back, took the SL, could have just, if you wanted to roll it down to this downside, could have stopped you out at break even if you wanted to roll it down to this point. Very crazy market. Okay, so let's just move on forward quickly to 13th. Okay, so this is 13th, 7:30. 1, 2. This is 13th, 8 a.m. Okay, so 8 a.m. has been formed around here. You can set your indicator to partition markets, New York open, one thing. Go and look for it. It's somewhere around there. I can't be looking for it right now. I used to have it on my chart later here. Okay, so 8 a.m. We have our 8 a.m. with this candle here. So let us fast forward to 2:30. 2:30. That's 1:30. This spike is 2:15, you know. 2. Is it 2 o'clock? Yeah, 2 o'clock. Sorry, not 2:30, 2 o'clock. Okay, so we have our highs. Where's the 8 o'clock? This is 8 a.m., right? This is 8 a.m. This bullish move is 8 a.m. And that's the highs that is created right there. And these are the low. This is the low here for the 8 a.m. whatever. Okay, so hold on. Okay, so okay, the line is straight to Ross. So let us now wait for either the highs or the lows to be taken out, and then we move to the 1 minute time. Okay, so this move happened around 2:15. So let us see if it was really something. I'm going to take it back to this place and go down to the 1 minute time frame and see how it played out at that point. Okay, this was the move that took out the highs. So what we should be waiting for is a change of character to sell it back, right? Since it has taken out the liquidity of the highs, that's the liquidity there. So let us look for a change of character to sell it to the downside. Let us see. Rejected straight down on the 1 minute time frame. Are we going to have a trade? We don't know yet. There is no serious move right now, because I will be waiting, since it has taken out the highs, I'll be waiting for these lows here to be taken out before I do anything else. I'll wait for those lows to be taken out. So let's see. Nothing. And then high impact news around 2:30. So maybe there was FOMC or something. You can see that high impact news around 2:30. But there is a way we trade high impact news. Let me show you guys. I normally do these things once. Let me show you. Now, you see this high impact news? It stopped here, created another new candle. Just watch it. Now, after this rejection of the high impact news, after the first rejection of the high impact news, mark the high of that high impact news. Okay, mark the high of the high impact news, mark the high, and then wait for that high to be taken out, and then look for entry. Simple. Sometimes you might lose the trade, but it works many times. Good. The high has been taken out now, Abi. Now let's wait for change of character on the 1 minute time frame and look for entry. It might not be change of character per se, but you will find entry if you look closely. Sometimes the market decrease gone. I think this was the entry around here. Very tight change of character out there. Push up, rejection to the downside. That's the change of character right there. And it came back with this week and it moved. But I won't have taken the trade, but you can see it. That's it. Okay, we had a break here, a mini break here, a mini break here, and let's see how this candle reacts this place. Okay, wait. That's not what I wanted to show you. That's not what I wanted to see. Because now I'm imbalanced. I want to use the internet trades now. I don't care about anybody. So this candle ended like this, right? And then a new candle to form. But when this candle ended, it created imbalance here. Good. This is what the risk. That imbalance there is where I'll take my trade off from. Put my stop loss on the high and target maybe 50% of this first bullish candle here. Maybe 50% of that candle will be fine by me. But just a short move. It's just a short move. Very short move. 50 pips there. Let's see if it makes sense. If it doesn't make sense, we move. All right, we move. Okay, taking Let's see whether we are in the trade or we are going to chop loss. I think we chop loss. So. Yay, we chop loss. So it has created a double top here. This double top here would have made me run out of the trade already because it is liquidity to just take the whole liquidity. Exactly. I would have run out of the trade after this double top was formed. I think it has taken the liquidity there. Let's see if it runs down or it stays. Okay, took us out. We move. We move. Let's wait for that change of character. I'm always very sure of these things. Let's find that change of character to the downside. And we look for entry. Right there. Okay. Where's the entry? Where do you think the entry can be around here? Personally, I'll just look at this whole supply zone here. Try again. I will not be taking this type of trade with my main lot size actually because yeah, it's news reversal. Damn it. It's news reversal. So let's see if this one makes sense again. Okay, we are in. We are in. We are in. So let's see if we hit profits or we chop loss. So at this point, we are already like, okay. So we are about 50% into the trade already. By now, I've taken profits. Why? I've taken partials because it created a low that broke this low. This is the first point of partials for me. I don't want to be keeping trades so long again because, guys, okay, so this is not the first point of partials, sorry. This is the entry. So this is the first point of partials. I don't want to be holding trades for long again because I've noticed that until you catch a move on the bigger time frame, like 1 hour time frame, where you know where it is going to, don't catch trades on like 5 minutes time frame and then hold it for too long. For now, this is January. Try to look at other time, maybe February, March. You can hold it another position, but you've taken part of your profit at a good point. All right. So yeah, I've taken partials here, most likely move stops to entry or not, because whatever I must have taken here will cater for the loss, even if it gets to loss. So let's now see what plays out. Let's see what plays out. We have a low here that I will be targeting to mostly close a bigger portion of the trade. Let's see if it reverses into this place or it just keeps going up. Okay, I think it just keeps going up. So again, on these lows, I think this way I would have just stopped my trade. This profit, I would have just ended the whole trade here, but the shenanigans would have been tiring. All right, so yeah, this is how I look for with reversals on news, high impact news. This is how I look for reversal. It creates highs, creates change of character, and then I think this trade we were too quick on this trade. We are not quick really. It created a high, took out the high, and broke the structure. One thing we would have waited for was like maybe break 2 structures, 1, 2, before we took the trade, because this very one here that took this high broke this structure here and broke this structure here before it finally now came back into entry. So yeah, we just learned another one now together. So there we go. There we go. Let's see. Okay, it came to my line here. So most likely this way I would have taken like 80% of my profit and move stop loss to entry. And then let's see how the rest run. You see, all of these shenanigans, I would have been out of this trade by now. There is no need. I hate when the market is wasting my time so much like this. Okay, so we've entered Wednesday. Now let us look for a trade on Wednesday. Remember, we did not see that New York open, New York close trade on Tuesday, right? We didn't see it on Tuesday, but we had a high impact news that we tried to trade the reversal. And to some extent, we had a little run into that reversal. We took one loss, and then we took a win that could have catered for that loss or even giving us profit for the day. So that's 2 trades for the day. 1 loss, 1 win. So let us go into Wednesday now and see what we have for Wednesday. So let us fast forward into 8 a.m. on Wednesday. I'd like to end this meeting as soon as the time ends, so to be somewhere. Okay, so this is 8 a.m. on Wednesday. So we are going to now play it from 8 a.m. on Wednesday to 2 o'clock of that same Wednesday. Okay, that's 6 hours time frame. So most of the time now, the London session, you'll just be freestyling to see what really happens in the market. Oh shit, stop there. Must be silly. So let's take it back to 2 p.m. Yeah, that's it, 2 p.m. Yeah. Okay. Two p.m. So let's look, where's 8 a.m. again? 8 a.m. is around here. This is the lows after 8 a.m. right here. This is the lows after 8 a.m. right there. Right, that's the lows after 8 a.m. right there. And these are the highs. So we have the lows, we have the highs. We have the lows, we have the highs. So so let us wait for one of it to be broken, right? I'll send you all this work now. Okay, so let's wait for one of it to be broken. So the eyes were broken. Yeah, the eyes were taken out. So let's go to the 1 minute time frame. Let's 1 minute time frame and look for an entry. You know that it won't be that fast when it was breaking out. That's why I want us to go to 1 minute time frame, because real time is always slower than this replay. Okay, so we had a breakout here. Now we are expecting a change of character to occur, right? And that breakout has taken the liquidity of the eye that we have here. Why? There's a liquidity here. When the market opened, it created a liquidity and it has taken it out. So now, $8 a.m. and 2 p.m. is New York open and London open and London close now. 8 a.m. Is London open, 2 p.m. is around the time that New York will open. So we are looking at the highest point and the lowest point of when London open to when New York open. And why don't we change trade currency itself? So yeah, let's see what happens after that. First of all, let's identify the lows that we are likely to want to take. This is a low here, but quite insignificant for me. And this is another low here. And this is another low here, quite insignificant too for me, okay? Quite insignificant for me too. One low, one low. So I might want to wait for this second low to be broken. So let's see what happens. It keeps going up. And let us see what it does. Took out this high again. So it has created a new low here for us now. It has created a new low for us there, right there. So let us see if it takes that low. Okay, we've taken out these lows, right? We've taken out these lows, nice and easy, nice and easy, nice and easy. I think I should delete this candle. Let me put that low again. Okay, that's taking out that low now, and we have our, that's taking out the FEG actually, but let us see. I think it was here. I think it's here. Let's see if it plays out well. So it took out the lows by a week there. Okay, took out the lows by a week, and now we have our imbalance created around this point. It didn't fill up to this point, so yeah, we have our imbalance created up to that point. So let's put our entry right there and our stop loss above. Trade with caution every time because market is not your father's property, as we all know. Okay, so yeah, we want to have our low somewhere around here. So let's see if it takes us in or we are fucked. Oh shit, this was the taking. No, this was the taking. I remember. If I did this trade, if I don't take them, what can I do? This was the taking. Hold on, guys. This was the taking. That's why I went back there that time because of that small candle I was seeing there. This was the taking. This very candle here was my taking for me. This very one here. This was the imbalance for me. Here to here was the imbalance for me. Here to here was the imbalance. As soon as it took it out by this tiny wick, this was the weak rejection. Don't stress me. This was the takeout. This very weak here took out these lows. This week here took out these lows, and then we mark out our fair value gap. Pardon me for that, guys. Pardon me for that. This is the week that took out these lows, and this is our entry. Because you're on the 1 minute time frame, every detail will matter at this point because you know what you are looking for. And that's one thing I wanted to really point out. That's one thing I really wanted to point out. And then you target these lows for TP1. No, you target these lows for TP1. There's a low here for TP1 and lows here for TP2 and lows here for TP3. Okay, so 1:5.3. And there we go. There we have it. Now, somebody will say, I have seen it. You have seen it. No, not really. Not really. We didn't take any trade on Tuesday, but I've seen it before. I can't remember what happened on Tuesday. So yeah, this was it, neatly executed to the TP. Neatly executed to the TP, actually. Oh, yeah, I need to trade NFP today. May God be with you. I'm not trading NFP today. Okay, so that's for Wednesday. Now let's go to Thursday. We have less than 1 minute to go. You can just join again, but I won't record the other one. This is the only one I'll record. Okay, now buy Euro USD. So let us, I won't record the next batch though. So let us go to the next day. I think this is 8 o'clock. Come on, stop that thing now. Oh. Yes. Okay, so this is 8 a.m. right there. So we will look for the highs and the lows till 2 p.m. Till 2 p.m. That's till like 2 p.m. So once it ends, we join again with the same link so that we can just complete this class. 8 a.m. Yes, 8 a.m. This is 8 a.m. This is 8 a.m. candle. So this is the high. Okay. And this is the low. Guys, I'll see you in the next link. Cheers. Let me end it now.